Yeah. Surprise, a little different than you used to. Yeah. Dropping these bars on YouTube, knowledge I introduced you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. Yeah. We need some cars on deck. Get the rollies, get the moe, all the Mars on deck.
All right, good evening, everybody. Welcome to this live show. Thank you so much for joining me. I have to say a few thank yous actually, because I'm looking at kind of my analytics and numbers, and it's got to the point where now I'm not having to ask you guys to kind of like and stuff. On the video that was on yesterday morning, yes, because there's a kind of an impromptu one. The likes on it are very, very healthy. So thank you so much already for supporting, I guess, is what I wanted to say. In today's live, I really want to ask the question, what is going to come next for rates? We've seen inflation drop yesterday to 7.9%. Talk a little bit about that. There has been some movement in mortgage rates today. But before we all kind of crack open a bottle of champagne, I think it's really important that we kind of get some context around that as well, because it's not all just win, win, win. So we'll talk about that, and we'll talk about what that long-term curve is going to look like now that inflation has kind of dropped and we're hopefully on a downward trajectory now. So quite a bit I want to get through. I also want to do a comparison between us and the US, because I think if we look at what the US have done and how we've acted so far, or at least the Bank of England has acted, there is a huge difference in outcomes. And I have a particular view, which I shared a little bit on Instagram a little bit earlier on. I would love to see and hear your thoughts. And so there is a poll in the comment section right now. I'm asking you, what rate hike do you think we will see come August 3rd? Because that's when the next Monetary Policy Committee meeting is going to be. So do you think we're going to see a 0.5% interest rate hike, a 0.25% interest rate hike, or do you think we'll see nothing because they'll just think, right, let's just call it off, let's just pause for a moment? I'd love to know what you think, so get voting, and before this live is over, we'll share the results of that poll to get started. So look, guys, as always, if you do get value from the video, I have to ask, because it feels like it's effective, please do smash the like button. It just means that other people like yourself who may need to hear this conversation will be recommended this video after this this live stream essentially ends. And if you haven't already subscribed, please consider subscribing. At this point in time, we are 16 away from 900. Hopefully we'll be able to hit that in the next day or so, but I'm really focusing on trying to grow the channel as much as possible, and your presence, your participation has a lot to do with that. So thank you so much in advance. All right, so where do I actually begin? I've got so many tabs open right now. So let's talk about what's happened to mortgage rates today. Let's start there, because I think that will be really, really interesting for most people to see. So this is the headline, right? Mortgage rates fall for the first time in 2 months. I swear I need to get like a sound effect that goes woo, because you think it's going to be really exciting. But actually, let's dig into the detail, right? So what they're basically saying here is that after inflation slowed to 7.9% in the 12 months to June, we are seeing the average 2-year fixed rate residential mortgage dip to 6.79% today on Thursday from 6.81. Now, look, don't get me wrong, but when did I do the live when I was talking about the fact that the average 2-year fixed rate was 6.66%? I'm sure that was last week. I just need to check this, because I was looking at this earlier and I was like, in between us doing that live and having that conversation around what was going on then and now, which, let me just go back on my library. 1 second. Let's have a look at this, because I'm curious. Because I reported that the day of. So we had that conversation on the 11th. So 9 days ago, a little over a week ago, we reported that mortgage rates were at 6.66%. Between then and now, somewhere in between that period of time, the average 2-year fixed rate went from 6.66 to 6.81%. So what they're reporting today is because obviously inflation has come down, and I'll show you a clip in a moment which talks about the long-term yield, the long-term curve. They've fallen to 6.79. Now, is that good news? It depends how you want to have a look at it, right? I think it still sucks. They're saying, meanwhile, the average 5-year residential mortgage has edged down to 6.31 from 6.33. I also read somewhere that the only thing that hasn't changed are trackers. The average tracker is about 6.03%. They haven't moved. And they haven't moved because they are so much more, they track the base rate, right? So they're not going to offer you that much discount on things like trackers. So this isn't really a winning headline, I guess, is what I'm trying to say here. Or at least it doesn't feel like it, right? Actually, I'm sharing the wrong screen with you. Bear me 1 second. There we go. Let me just show you this. Sorry, I've got so many tabs open. Didn't realize I was sharing the wrong one. So this was the headline. So the average 2-year fixed rate mortgage has dipped from 6.79 on Thursday from 6.81. Meanwhile, the average 5-year fixed rate residential mortgage edged down from 6.31 to 6.31 from 6.33. That's the headline. Not really good news. I mean, if you put this into context, it's what we've always been speaking about, and we have been speaking about here on the channel for the past, it feels like a month or two. If you're in a 1%, 2% fixed rate mortgage, when you come to remortgage in the next few months, and there are 800,000 homes, people that are going to be coming off their fixed rate still, between 4 and 800,000, you're going to be going on to rates that are 5-6%. So that monthly increase in your mortgage payment is going to be absolutely huge. And this lends us to the conversation of, how else is this being reported? And this is why I want to play you a video from Sky, because they explain very, very clearly the backdrop from which we've come from in terms of the interest rate curve, where it was projected to go and where we are today, and how much of an impact the news yesterday has had on the outlook moving forward. So I'm going to play this clip for you. I'm sure I've selected the right option, but if you can't hear it, please do let me know. But we should be okay. We should be cool. Let's go with this one right here. And hopefully it's not going to play the horrible ad I had to sit through earlier. But let's have a go at this.
It's not a drastic change. People are still expecting interest rates to rise further from here, but at now a slower pace and with less rises needed still.
Yeah, and I mean, it's a slightly complicated chart, but it's worth just kind of underlining what's going on here, because what you're seeing here is off in the future, what's expected for interest rates. And I think we can put it up on a big screen now, and I can kind of point a few things out here. First of all, think back, that kind of red line there, September 2022, you can kind of see that was what was expected after the mini budget. So a very big increase around that time of interest rates kind of expected to go up. Obviously, that didn't happen. Interest rates kind of went up much more gradually. But here's the thing that you really should focus on right now, okay? So not long ago, people thought they were going to kind of stay very low. We're in a different world now, totally different universe. People think they're going a lot higher, and indeed they have. But here's the key thing, okay? Only a month ago, actually really a few weeks ago, the expectation was that rates were going to get up to maybe 6.5%. So that red line there. Whereas now, just as of this morning, you can see they're expected to peak below 6% and to come down. Now, I know in the circumstances, that's not necessarily good news. That certainly wouldn't have been considered good news for mortgage holders back in February last year when interest rates were expected to stay really low. But even so, the move is downwards rather than up. And that line has been going up, up, up. These are expectations, as I say, for the future for interest rates. And those lines, those curves have been going up, up, up. The fact that they're just gradually coming down, it's a change in the dynamic, which, as I say, is the important thing. As Gemma and Mohammed were saying, the levels are high, whether compared with the rest of the world, they're high for everyone, feeling this. This is another part of the cost of living crisis right now, mortgage costs, as well as gas costs, as well as everything else. But the fact that the dynamic is starting to shift is something to note and something to dwell on, because there's been so much bad news on this in the past.
Yeah, so look, that's a really, pardon me, That's a really nice take from the guys at Sky News there. And I think the main thing that I kind of key into when they're talking about that is, you know, things have changed very, very quickly over the course of 24 hours, because it feels as though the momentum is swinging in our direction in terms of this battle trying to bring inflation down. Remember, I mean, for full context, we can celebrate that it's at 7.99 from what, 8.7%. But the reality is the cost of things are still increasing. The reality is that we're still almost 4 times the 2% target. And so whilst this is great news and the outlook is very, very different, we are in completely different worlds now. And they've said it there. If you looked at the interest rate curve and what the rates would have been expected to be back in, 2021, even February 2022, where we live right now, it's a completely different universe. We're in a completely different environment now. And so that adjustment that we need to make personally as people is quite huge, it's quite significant. But ultimately, because we're in this, I guess, vein of momentum right now, the next question is going to be what's going to happen on August 3rd. So on August 3rd, the Monetary Policy Committee, which is 30 members of the Bank of England, including Andrew Bailey, will basically meet to discuss what they do with interest rates moving forward. Now, I'm just going to have a look at the poll really quickly because I'm interested to know what you guys are actually thinking here. And this is the one thing that I do not like about YouTube. You put 3 options in here. I know that 64% of you, 64% is the one that most people are going for. 63% now saying that you expect an interest rate of 0.25% hike. So a hike of 0.25%, a quarter of a percent. That's the most popular vote right now. Now, I want to bring in a comparison between us and the States, because many will argue that the States, the Fed, were way more decisive than us and the Bank of England. It almost felt at one stage that if the Fed did something, we would do something a month later. We dithered and dallied, and many people are arguing that actually if they're taking action a little bit earlier, maybe we would have inflation down a little bit more right now. So let me just go through this really quickly, because I think this is really, really interesting, and it's worthwhile just having a look at. So I need to go back one screen here and just show you what the inflation rate in the United States is right now. So currently, their inflation rate is 3%. Now, bearing in mind, our financial systems are very, very similar broadly, right? We both have an inflation target of 2%. Now, interesting, when you have a look at the interest rate, the inflation curve with in the United States, look at this. So in July 2022, their inflation rate was at 8.5%. 8.5%. And look at what they've basically done. They've seen a steady decline every single month since then, to find themselves now at 3% against the 2% target. Very, very decisive. Now, what I also want to do is I just want to just cue in our interest rate curve, our inflation curve, so you can see where we've been over the past, since July 2022. Have a look at this one right here. So in July 2022, we're at 10.1%. We saw a bit of a dip here, but then it goes up. And look at what we've been. We've been in double digits, really, for the past, that's 6 months? 6 months between October and May. March. 6 months. Double-digit figures. We've only just now started to see, we've seen a bit of a drop, and now we're in with really good momentum, but our target is still 2%. So we haven't had that same level of consistent decline in inflation over a period of time. Now, what's more interesting to have a look at is this. Let me just see let me find the right one. Where is it? Where was it? I know I've got it here. Is this graph right here. Take a look at this. Now, this is the United States, And this is their response to inflation month by month, looking at their interest rate, the Fed rate, which is equivalent to our Bank of England base rate. So look at this, October 21, 0.25%, around about 2.25%. We started to see movement in like May of 2022. Now, let me just go back here really quickly because, where is it? Let me just say I've got the right one here. We know, share this again, in July 2022, they were 8.5%. So many would argue, actually, they started to really make some moves and start to increase their Fed rate from about what, May onwards. Then we really started to see them ramp up 1.75. I mean, that's a lot. I mean, they went from half a percent to 1%. Then they went from 1% to 1.75. They went from 1.75 to 2.5, stayed there for a month after that, 3.25, stayed there, leveled it out. Now, what happened in October? That's around about October 2022, right? What happened to their inflation rate around about the same time? Let's just see if I can find the same one. So October 2022. So bearing in mind, when they're making sharp increases to their Fed rate, they're still seeing inflation fall. In October 2022, they're at 7.7%. But look at what they do here now. They go from, 2.5% straight up to 3.25, stick there, 4%, 4.5, 4.5, 4.25, 4.5%. They go up to 5, 5.5, then come down to 5.25. They're currently at 5.25 roughly right now. They have been very, very proactive and aggressive with their interest rate policy to try and tackle inflation. Now, when you look at the American inflation numbers, which again is this graph right here, many people will argue that they're not facing the same challenges as we are. And that is absolutely true. They didn't necessarily have the same impact when it came to energy prices. They are a country that really, they've got a lot of energy that they can produce themselves. So they have things that they can basically do. So their problems weren't exactly the same, but the proof is in the pudding. They are a good example of how monetary policy and the use of interest rates could be used to influence inflation. This is at least what the Bank of England, Jeremy Hunt, Andrew Bailey, Rishi Sunak are hoping to be able to replicate. Now, let's have a look at what we were doing during that same period of time, because we know, yes, let me just make sure this is the right one. Let me just share this one with you. Right, so this is what we were doing. Interest rates of 0.1%. 0.25, 0.75, stay at 0.75, 1.25, 1.25, 1.75. But we did this over a protracted period of time, over a longer period of time, and still didn't see any movement with our interest rates necessarily, because guess what? This is our inflation graph that tells the story. Our interest rate rises were wholly and largely ineffective during that same period of time. Now, I know completely different governments, completely different environments, completely different policies, but they're using the same blunt tool on interest rates. And so that leads us to the question that's actually in the poll, right? That leads us to the question that's in the poll. What are they going to do come August 3rd? This is what I think they'll do. I think that Andrew Bailey and the guys, and I hope I'm wrong with this, I think they'll be like, okay, we're making progress. Let's give a small interest rate hike and go 0.25%, a 0.25% increase. And whilst that will give a lot of respite, and when I'm thinking about respite here, I'm thinking about people who mortgages, renters, cost of debt, right? That's what I'm thinking. It's going to give a little bit of respite. And we're seeing some of the positive effects on mortgage rates today, although it's still pretty much a joke, right? You're still going to be paying a lot more for your mortgage regardless, right? But they have come down. I personally think that whilst the momentum seems to be in our favor, they should push on head on and be bold, and be courageous, and do another 0.5% interest rate hike and try and push that number down, that inflation number down as much as possible. And I know that that's controversial. I know that that means that there's going to be a lot more pain for people, and that's going to potentially impact mortgage rates even further, assuming it's not priced in already. All right. And the fact that mortgage rates have gone down today kind of says that they were probably pricing in the fact that we maybe would have seen another 0.5% increase to the interest rate on August 3rd. I think the right thing for them to do would be to push forward with 0.5%. And the reason for that is I think the quicker we can get back to a 2% inflation rate, the easier it's going to be from a personal finance and just generally from an expense cost of living point of view. It will feel as though we've resumed some kind of normal service, if that is even a thing. But I don't think that they're going to do it. I just don't think that they're going to do it. I was speaking to someone today and they think there's a lot of noise coming out at the moment that they're going to push on with a 0.25% hike. And hopefully that does some kind of job to further reduce inflation. But I guess we're going to have to wait and see. And so at this junction, what I want to do is I just want to end the poll on here just to see what you guys are saying. Because you guys have had your say. So what do you guys think? Let's have a look at this. So 63% of you say went for 0.25% as the hike that we'll see. 27% of you think we'll see a 0.5% increase. And 8% think that they'll do nothing. I would be very, very surprised if they did nothing. I think that they will get so much backlash if they did nothing. And so it's almost one of those situations where it's like you have to cause more pain to fix the problem. And that pain, unfortunately, is coming down the track for many a household. And it's just a really, really crap place to be right now, to be honest. And what can you do? You've got to roll with the punches, right? This is the thing. None of us can control any of this. Can't control inflation. We can't influence what Andrew Bailey and the guys are going to do. I mean, that's monetary policy, right? We need economic policy. We can influence the next party that gets into government. But like I've already said on the channel, I'm not really confident that any of them know what to do. I don't think that any of them have any clue what to do. But I guess something new is better than what we've already had, right? So there we go. That's my take. And I'm going to get into the comments now because I just want to hear what you guys are saying in the comment section. Give you guys a chance to have your say and share your opinion as well. So just want to say hello. Annette, how you doing? Meji, how you doing? Joshua, let's have a look at Joshua right here. Joshua's saying, I hope they keep the foot on the pedal and do another 0.5% rate hike. Rather, they do too much than too little. I'm with you, mate, 100%. I would rather they are seen to do something than rather just do too little. Because the danger is, if they go with a 0.25% hike, or God forbid, which I don't think will happen, a zero rate hike, and inflation goes up again, it's even worse. And they'll get slaughtered for that. So I'm in Joshua's camp. I hope that they do 0.5%, but I don't know that they will. Kevin is saying here, I think 0.5% highly likely because I think Andrew Bailey could be spiteful. I don't know if he'd be doing it out of spite, mate. I mean, look, this is the difficulty of having that kind of role, right? You know that the decision that you make is going to have a material impact on millions of people. But if you don't do it and you allow inflation to get out of control, that causes even more issues. So it's like I've said, you've got to cause pain to try and fix something. And it's never I can't imagine that it's an easy decision to make by any stretch of the imagination. I definitely wouldn't want to be in issues trying to decide what you do, bearing in mind that people are going to suffer off the back of that as well. It's a horrible place to be. Squibby just saying here, 10% mortgage rates by end of year. Mate, I hope not. I really, really hope not. That would be disastrous. That would really be disastrous. I was on Radio 4 this week because there's an issue at the moment with Help to Buy. And I've been thinking about whether I should do a video on this or not, but it's not really something that's in the news or in the mainstream right now. So I've kind of sat on it. But there's a big issue with Help to Buy. people are not able to repay their Help to Buy. And because of the issues with the administration, with the new company taken over from a previous company, there are people, bearing in mind where we are, interest rates going up. So imagine you owe a Help to Buy and you're coming to the end of that 5-year period, or you're in your 3rd year or 4th year of no interest, right? And you're looking at, right, how am I going to repay this Help to Buy, which is probably 20% of your property value that you took out, right? At the time when you bought it, your purchase price. Many people are remortgaging to release equity from their properties before property prices crash to be able to repay their Help to Buy. But they cannot get correspondence from the new company taking over the administration of Help to Buy. And so what's happening is a lot of people are in the process of remortgaging, not getting the redemption figure. And because they're getting it late, they're basically going on to standard variable rates, which, by the way, minimum 7.99%. I had a conversation with someone today. His name was Josh. This week, he was on the radio with me. His name was Josh. He's going to a standard variable rate at 8.49%. His mortgage, I wrote it down in my book. It was, mate, my jaw dropped. His mortgage was going to go up from, what did he say it was? Let me just see if I can find it in my little notes here. His mortgage was going to go up from £950 a month to £1,770 a month. All because he couldn't get a redemption figure from the new company that is looking after Help to Buy and repayment of Help to Buy. There are thousands of people in that boat right now. And so I hope we don't get to the point where we're going to see 10% mortgage rates. That will be catastrophic. People will lose their homes. People, like, it's not even worth thinking about. And that's why I keep saying we may not like the political party that's in there right now or the one that might be following them, but regardless of your party allegiance, you really need to have your fingers crossed that they get it right. Because if they don't, they're multimillionaires, pretty much all of them. They'll be sweet. They'll be absolutely fine. Ordinary people like you and me, we're the ones who will suffer. We're the ones who will lose homes. We're the ones who will lose jobs, because by that point, if it gets that bad, you could argue we're in recession. It's not even worth thinking about. So I hope that doesn't happen. Vishal, dude, thank you so much. So Vishal, he reached out and he asked me to send him a signed book. So I've got my books right there. I sent him a book yesterday, and he kindly sent me a picture of the book arriving today on Instagram with obviously a message from me in there. So thank you, mate. I appreciate you. He said he wants a 0.5% hike. So same camp, I would say. Richard, I used the killer chat up line on a first date today. Hey, baby, are you knickers of the UK? All right, let me just pull this a little bit further. I don't want it to be in shot. To be honest, mate, you got jokes. I like you. This is great because I'm projecting them lowering at pace quickly. I don't know if interest rates are gonna look. There is this commentary at the moment, and two trains of thought. One train of thought is basically saying that we'll see interest rates rise, but then they will drop off quite quickly. I don't think that is going to happen. I think if they reduce interest rates quickly, I think it could have a negative effect on the work that would have been done by increasing the rates. So what I think will probably happen is we'll see interest rates probably stay high for the next 12, maybe 18 months, and then they'll start to lower it. But they won't be lowering them at the rate it was increased. It will take a much, much lower, a slower rate of reduction over the long term. And I'm probably talking maybe a year, maybe 2 years, 3 years maybe of them doing that, because I think they'll be very, very mindful that they don't want to undo any of their hard work and the pain really that they've caused to get to where they get to. So yeah, I hope they do the responsible thing. But again, I could be absolutely wrong. You just never know. CJ's saying here the real inflation figures are worse. This is all self-inflicted, as inflation is due to cost, push, and profiteering. I mean, what do you mean by profiteering, mate? What do you mean by profiteering? There are so many things that go into these inflation numbers. You can talk about food prices and so on and so forth. You can talk about the weak pound, because obviously that has an impact. If the pound is weak, we're importing products and services. Of course, that's going to push up the cost of products and services, right? Particularly if we're importing food. So is it really profiteering? I have no doubt that there is an element of profiteering in it, because companies are companies, and a lot of companies didn't get any help through the cost of COVID, for example, and obviously the energy price crisis that we've just been through, cost of living there. Business got no support; they've had to foot the bill. So, you know, I have no doubt that there is an element of profiteering, 100%, but I don't think it's necessarily as bad as many people would like to believe or are led to believe it is, because it is a very, very complex equation. There are so many things that go into inflation being as high as it is. And if you think about food inflation, which is the highest, 18.3% or 17.3%, I think it was yesterday, 17.3%, it was yesterday, it's still a lot, and, the government tries to do what they can, meeting with supermarkets to try and put caps on prices and stuff. That would directly help them manipulate inflation numbers further, you would argue. But the businesses said no, because it could lead to shortages. They tried that in the 70s. It didn't work. So why is it going to work in 2023? But I have no doubt there'll be parts, profiting in there. Companies are going to profit. They need to profit to keep people employed, to stay afloat. So is it really profiteering in the negative connotation, or is it just an essential business practice? We need to be mindful of this. We look at, and I'm not even talking banks, we look at big corporations as though, they're not entitled to make money. They have shareholders that are reliant on that profitability. And I've spoken about this before, pension funds. If you're invested in a pension, you're relying on the profits of a business. So they need to make profit. But is it profiteering? I don't know. It's an interesting debate to have. Scooby just saying, until more of society are touched by the effects and it becomes ingrained, there is no such thing as free money, then rate hikes are needed. That is 100% true. And we have, for the longest time over the past maybe 3 to 4 years, we have filled up our boots on low cost debt. This is how it comes home to roost. Buying things that, just because it's cheap. Yeah, I get it. Didn't really need it though. This is where it comes home to roost. And this is the reality of things. And like I said at the beginning of this, the world that we live in right now is very, very different to the one that you would have expected in 2021, even 2020. Very, very different. And what is going to happen is our standard of living is going to drop, because our cost of living has risen so high, and it's going to take some really hard work for us to crawl back out of that to get back to the kind of standard of living that we had prior to any of this kicking off. And so, yeah, I think that statement is 100% true around free money. There is no such thing as free money. You've got to pay for it back in some way, shape, or form. See, just saying it, Biden introduced the Inflation Reduction Act. Our government has done nothing and just sat on their hands. I mean, they have been very proactive. I mean, I'm not the biggest fan of Biden. I think he's a bit of a blabbering fool, to be honest, and he's a disappointment, to be honest. But, they have been very proactive in trying to combat inflation as much as they can. Emmanuel's saying, I've heard arguments that our inflation is different in the sense that US inflation was from consumer demand and our inflation is from profiteering. Making rate hikes more effective for the US. Yeah, I would argue that. I mean, there was consumer. I mean, the Harley Davidson story is a prime example of that. I don't know where this profiteering thing comes from. Are people referring to the energy companies here profiteering? What exactly are people referring to here? Because I don't buy that narrative necessarily. I really, really don't. See, just saying it, interest rates are not moving core inflation because it's driven by cost push. That is absolutely true. And the longer we have a weak pound, that's going to persist. So the problem then becomes you need monetary policy, and you also need some economic policy as well, because you need the two of those things working hand in hand. On Sky yesterday, they asked me the impact of Brexit on what we're seeing right now. And the simple fact is, and this isn't a political show, right? But the simple fact is, Brexit has a huge impact on this. And whilst it's quite nuanced, one of the simple ways that you can have a look at this is, look at our workforce. Look at the fact that now you would have Eastern Europeans that would come over here and they'll be willing to do certain jobs at a much, much lower rate than British nationals, right? Because they see more value in the pound because they can send that home to exchange at a better exchange rate for their local currency. So they'll happily come over to the country and do those jobs that we didn't want to do. We don't have as many of those people coming through. And what that basically means is that now these companies that were using that labor, you can call it cheap labor, it probably is, and it is actually, just call a spade. Now they have to increase wages. And when they increase wages, they have to pass that increase on in their products or their services, right? It's only right. So when you think about that kind of stuff, and again, there are so many nuanced inputs into this inflation equation that, Brexit is one of the key ones as well. And people may not necessarily want to admit that, but I think the evidence is there to show at this point in time. And we can't go back and go fix things and be like, oh, what if we didn't vote to go Brexit, how would things go? We don't know. There is no hindsight view here. We don't know, but these are the cards that we're dealt. This is what we've got to deal with. And collectively we have to all be pulling in the same direction collectively. So you just say there, right? Rate hikes aren't working. Well, I think they're beginning to work. Hopefully they continue to work. I hope. But just look at the likes here. How far are we into this? We're 36 minutes in. Guys, there are 96 people on at the moment. So we're 33 likes. If we can get up to 50, that would be amazing. That's only 17. And again, the reason why I asked for likes is because if you get any value from this video and you express that you got value from the video with a like, then what tends to happen is when this stream is basically ended, the YouTube algorithm looks at the video and goes, did people enjoy that live? And if people have expressed that they enjoyed the live, the algorithm then takes the video and recommends it to other people who may be looking for something similar, a similar topic. And that means that they also get to benefit from this conversation and from what we're talking about right now. And so it may seem like a really small action that may, again, I know is an inconvenience to many people, but it really, really does help. So if you can take a second just to tap that like button, that would be amazing. I do actually, you know what? I want to give a shout out. Because something new happened today. So I've been on YouTube for 3 years, right? For 3 years. Now, sometimes when I do lives like this, I get a super chat. I had a couple of super chats on Sunday last week from Kevin and people like Pat, for example. But on YouTube, they introduced this thing maybe about 2 years ago where you can watch a normal video. And if you really enjoyed it, you can tip to say thank you. And I had my first one today by someone called Calvin. And I just want to give a shout out to Calvin. Thank you so much. The tip was for $1.99. That's not the point, right? The point is that someone actually tipped and said thank you. And I do want to give a big shout out to Calvin if you're watching. And I said it in the comments. You're the first person in 3 years to do it. So thank you so much. Just from literally watching a video and thinking, oh, this was really, really good. So thank you so much for that. And thank you guys for being here as well. Let's see what everyone else is saying. When CPI figures eventually start to reflect the increase in cost of mortgages, inflation will get sticky. Yeah, I mean, isn't that going to be something to unpick? And I'll be interested to see how they're going to unpick it. I don't know how they would do that, to be honest. I guess we'll cross that bridge when we get to it. Leandro, above 8% mortgage rates, everything breaks. There's no guidelines for that. You'll just be dealing with expectations. Would there be? There isn't a modern day. There isn't a modern day guideline, but we have seen double-digit interest rates before. We saw them in the 70s, 80s, 90s. We did see double-digit mortgage rates. I guess the world was very different then because of the level of debt. The level of debt was small, much, much smaller than the level of debt now. So if we see 8%, 9%, 12%, mate, I think we're so close to 8% mortgage rates. I think we are that close. I mean, if you look at the standard variable rates are already there. But the minute you start getting there with, things like trackers, things like fixed rate mortgages, that is going to be painful. If we get to double digits, people could say, well, we've been there before, but we've not been there before with the level of debt that we carry now as a nation and, you know, as people collectively. We haven't been in that environment before. So I hope it doesn't happen, because that would be one hell of a case study to look at. I'm due to remortgage in January next year, fixed for 2 years or 5 years. I'm thinking 5 years for stability. Mate, great train of thought. The most important thing here is, if you think about a 2-year fixed, yes, you may be in a position where you can remortgage after 2 years and rates may have come down, but you're only going to be able to budget and be financially stable for that 2-year period. If you know that you've got stuff that you need to do, things that are important to you, and you want that long-term peace of mind and stability, 5 years is probably where you want to go. So your train of thought is right. But again, make sure that you're speaking to your provider. They will have a mortgage advisor there, just so that you can weigh up what the financial cost is. Because obviously over 5 years, you know, the interest and all that kind of stuff, make sure you know the full equation. But for stability, over that long term, I think a lot of people will prioritize that over a 2-year period, particularly if there's certain things that they need to plan for. Yeah, Emmanuel's saying here that they said that about 6% being the breaking point for mortgages a few months ago. No one really knows. It's true. No one really knows. Okay, so this is a clarification. This is a nice clarification point, saying supermarkets right now are a great example of profiteering. The comeback that I would say to that. So look, over the last year or so, every single week when I did Channel 4, Steph Pack Lunch, we always had some kind of outlet, some kind of assistance for families when it came to dealing with the energy costs, so on and so forth. Businesses got none of that. Businesses got zero help. And businesses, you think household energy bills were expensive. I know a friend of mine who has a business in Leamington Spa. His energy bills went from something stupid like 500 quid a month to something like 3.5, 4 grand a month. And he's got a relatively small business. Now you escalate that number and you take it to Tesco's, Sainsbury's, that kind of level where you've got hundreds of supermarkets and stores, hundreds. And you've got refrigerators that you need to run to keep the produce cool. It's not like you can just turn those things off. You've got to store things that's using energy. You're going from what may be a monthly bill for a store of, you know, something like 25 grand, for example, to 100,000 pounds. And the government gives you zero assistance. Nothing. Nil. Nada. You still have to keep staff on board. You still have to obviously pay your suppliers. You've got to deal with all the normal business running costs and still remain profitable because you have shareholders, but deal with your energy bill increasing substantially with zero help from the government. Zero. So when people say supermarkets are profiteering, I don't think what they're doing right now is profiteering. They're simply trying to survive. And that may be a very unpopular opinion, but I come from the point of view that I've covered a lot of the consumer help that was available to consumers, to households. There was nothing for businesses. Whenever someone would ask a question that, you know, I've got a business with these energy costs, there's nothing I could tell them. Nothing I could tell them. A lot of businesses had to shut premises, had to let staff go. These are small businesses. Some large companies have shut down because of all this stuff. So is it really profiteering? Or are they trying to get back to, right, let's get back to a healthy balance sheet so we can continue to survive as a business, so we can continue to employ people, so we can continue to give value to our shareholders who have pension funds, so on and so forth, invested in us for their incomes. So I don't necessarily see that as profiteering when you look behind the I guess, the veil and realize what they've had to go through over the past, 2 years? With energy prices on its own, not to mention everything with COVID as well. It's been a very, very tough 3 years for business altogether. So at what point, how much can business, you know, supermarkets, for example, how much can they afford to step in without disappointing shareholders, without having to scale down, you know, staff? closing branches, letting people go? At what point, where's that breaking limit? As consumers, we don't necessarily get to see any of that information, but that doesn't mean that equation doesn't exist, because for a lot of businesses, it does. It does exist. And it's not easy to cut down on your overheads in that kind of supermarket environment, because the knock-on effect is, well, can you provide certain products and, provide certain things that people want? It's really, really difficult, mate. And, we were speaking about the weak pound. A lot of these guys are importing produce into the country. They've had that cost to deal with as well if the pound isn't doing too well. So I think it's really, really difficult. And again, that's why I don't necessarily agree with the term profiteering. They have to make profits. They are a business. That's what they are there to do. Yeah, and CJ's saying here that making profits and profiteering are two different things. So maybe we need to have a clear definition of what people mean by profiteering. In what sense? Profiteering because of what? In what example? In what instance exactly? Squibbage just saying here, utilities went up as soon as the shock came. Now they're well down, yet apparently come October, prices will remain the same. I mean, yeah. Please tell me how that makes sense. I mean, I know that I got an email from British Gas saying that my bills were going to be down, going to come down by like £300 a year for the year, £300 reduction. So what's that, 50 quid a month, roughly? But then my electric and gas bill tripled, tripled, if not actually quadrupled. So now they've given me maybe back a quarter. Like, make it make sense. Make it make sense. And there's this scandal around everyone who signed up for a green energy tariff. They were still paying high prices, even though the source of the energy was supposed to be from green, renewable energy sources, right? It does make you question. It really, really does. And in that context, I can definitely see the point that people would make around profiteering. That I can see, for sure, 100%. I'm just scanning here. Bear me just 1 second, guys. Yeah, and this is what Vishal's saying here. Energy prices, energy companies are profiteering. I would not disagree with that at all, because what they've done with energy, oh my God. Yeah. The question is the government going to do anything about it, really? I think. Will they do it? I mean, this has been the age-old question, right? What are they going to do about it? They tried to do something. Was it really effective? Yeah. Was it? I mean, you could say that came back in by way of paying for the assistance that households enjoyed, but they still walked away with a ton of profit, right? So in this instance, I can completely agree with the profiteering, 100%. See, just saying here, Brexit is a big factor. We have an aging workforce, which is only going to get worse with not fit for purpose immigration policy. Yep, I would agree with that as well. Yeah, just saying here, profiteering, mate, is capitalism. If businesses are not making profits, they're done. Easy solution, open market, more competition. You know what? Over the past few months, like talking about this online, I have started to question, like at what point does capitalism become too much? At what point is it detrimental? Because I understand profit. I completely get that. But you can't have profit to the degree that society crumbles under the weight of capitalism. And I think we're almost at that precipice, it feels right now. The divide between the haves and the haves not is huge, huge, especially in, developed countries. I mean, the States, for example. I mean, I can't remember what the stat was, but it's like the top 1% has more wealth than the bottom. I think it was like 80 or 90%. That is crazy. Born out of capitalism. And at what point do you say, well, actually, you know what? We can't continue to do this. It doesn't work anymore. You can't have all the wealth at the top end and then everyone else is just squabbling around and trying to survive, climbing over each other to try and survive. I mean, it's not sustainable. It just isn't sustainable. it's a conundrum, mate. It's a real conundrum. Someone's saying here, Keir Starmer has an opportunity to push down energy costs massively. It goes through with Great British Energy or generates revenue for green investment, could cause deflation. You know what? I'm not sold on the Great British Energy idea. I need to see a proper plan for it. Because throwing out, look, we will do this or we'll nationalize or something like that, that's all great. That's all great as an idea. The execution is what's really, really, really difficult. It's the same thing as trying to say we'll nationalize the banks. If you try and nationalize the banks, someone has to pay the shareholders. Where's that money coming from? So it's a great idea, Great British Energy, our own energy firms producing energy for the benefit and the, it's cost effective for the people, right? That's great, fantastic. I want to see the plan because the idea is great, but the execution for that would be incredibly difficult. How is he going to make that happen? So I'm not bought into it until I see some plans. And this is the thing, right? Will we see this when they start campaigning for the general election? Will they elaborate on how they're going to do that specifically? Or is it just this fanciful idea that they would love to do, but actually when you get down to it, it's almost impossible to execute? So I hope there's some real substance to that, because I think it would be a great solution, but it's not a solution that we'll benefit from in the next 1 or 2 years. That's very much a long-term project, really, and that's great for the future. And I think we need to be future thinking, forward thinking in that sense. But I want to see the detail of it. Well, I'm just scanning right here. There's a lot of comments, so I may not be able to get to all of these, by the way. And we are 52 minutes in, so I don't want to keep this longer than about an hour or so. So I'm just going to scan really quickly for other bits and pieces, other comments or questions that I can quickly answer. And then I may be back tomorrow because I'm monitoring everything that's going on with mortgage rates at the moment and everything that's going on there. And mate. My view is we run the danger of hoping for what has been, and that ship has long sailed. And I think just the adjustment that needs to be made, the adjustment we all need to make, is pretty huge. And yeah, I just can't. We'll look back over like this era of cheap debt and mortgages at 2%, 1%. We'll look back at that in like 10 years' time and be like, wow, like how did that happen? Like, come on. We will, but we're not going to see that again. I can't see us ever seeing those kind of rates again. Cameron's just asking here, does all of this make you want to leave? I know you said Dubai has played. I know you said Dubai. Has this played a factor in that thought, mate? Dubai for us has been on the cards for probably about 3 years now, and to be honest, the plan was actually to move next month in August, but we're not going to do that because there's certain things that have changed for my partner. Which means that she's going to get better opportunities if she waits for the next round of recruitment for what she does in Dubai. She's going to get a better offer, which is going to be more money. And so probably it's going to be next year now. But look, even the plans that I had from a financial point of view, because I've been planning this from a financial point of view, we've been planning for the past 2 years. We're going to have X amount of money. We're going to take that over there, and that's going to be security, all that kind of stuff. That's completely changed now because of interest rates and everything that's happened. So my thinking has changed, but it does beg the bigger question, and it's ironic, really. It's ironic because many people look at that part of the world as though it's inferior. And honestly, if you've never been there, maybe you will think like that. But trust me, what they're building out there, mate, forget the tax-free status. Just the fact that they are so forward-thinking. They are so forward-thinking. It's mad. I could make a ton of money out there doing what I do now. Like from a corporate point of view, I've got a best-selling book. I've done TV in the UK. My opportunity is huge. But they are so forward-thinking, and there are so many opportunities out there. It's not perfect, because nowhere's perfect. But if you want opportunity, forward-thinking in like societies, mate, that is the place to be. Then you've got tax-free status on top of that as well. It is expensive. I mean, rents. I've got a friend out there, Martin. Rent doubled this past year. From the last time we went, because we didn't go for Christmas and New Year's last year because I was writing the book and I had to get the submission done. We used to play around and be like, oh, what's a property like? A property just off Dubai Marina, and if you've ever been to Dubai, you've got Dubai Marina, then you've got Barastes, which is like a beach bar type thing. They're building a whole massive development, flats, apartments, all that kind of stuff opposite there, water facing. The prices of those doubled this past year. You could pick up maybe something like a 2-3 bed apartment, pretty decent, for about 500 grand. Now you're looking at 1.2 million. It's mad. Why? Because Russians have ended up there, because obviously the war with Ukraine. A lot of Chinese people are out there now moving money, because obviously what's going on in China. So now there's such a massive influx into Dubai. Everything's gone up. Prices have gone up. You go onto any holiday site right now and type in Dubai, and you go and try and stay in the Dubai Marina for Christmas. I was looking the other day. There was nothing cheaper than 5 grand per person. It's mad. It's mad. It's crazy. And I'm telling you, we've been going there for a very long time. We've been going there for almost 10 years now, right? You could get a holiday 2 weeks out there over Christmas and New Year's, $1 grand between you. Now, nah. It's mad. So, and when you start thinking about different parts of the world, that part of the world, mate, listen, yes, it's a culture shock. Yes, you have to adhere to their cultures. You have to. And why shouldn't you? Like, we can't just go to a different country and then behave the way we want to, like as if it's our own country. They have laws and they have cultures and they have things that you need to abide by. And obviously that is something that a lot of people struggle with. But if you're willing to, look at all of that and contend with all of that, the people out there are amazing. The locals are amazing. It's a different level, and it's a different way of life. It's a different way of living. They have their problems 100%. I'm not saying that they're perfect in any way, shape or form, but if anything, you become more aware of privilege for sure. But the same can be said for this country here. Only we kind of, I guess, dress it up to be more polite than it is, whereas they don't necessarily do that. But yeah, Dubai did have some input in the way that I'm thinking right now. And I think, over the next year or so, next 1 to 2 years, we'll be looking to move, and I'm going to be looking to set up a business. I went to Dubai last month to figure out, right, what does it take to set up a business, get all the information, all that kind of stuff. And I'm pretty much ready to go, pending other things happening. But that's what I feel is right for me. It's not going to be everyone's cup of tea, and neither should it be. All right. Okay, cool. Look, so many comments. Thank you so much, guys, for this. Let me just address this. Forward thinking for the female population. Dubai is one of the safest places on the planet, mate, even for women walking around. Now, what you're referring to there are cultural differences. And I think as citizens of the world, our standards you cannot put on another person. And I know that may sound really kind of like controversial for people, but I think it is a point of mutual respect for one another's cultures. And that isn't to say that it's perfect. That isn't to say that anything is all right and it's all correct. No, it isn't. nothing's right and correct in this country. It isn't, right? Nothing is right and correct in this country. But as far as safety goes, people feeling safe, that country is the safest on the planet. You could literally leave your home, leave the door open, leave your car with the keys running, leave stuff in your car with the windows down. Nobody will steal from you. No one's going to cause a fight. Nobody's going to jack you. No one's going to try and kidnap you. No one's going to try and do anything, because everybody respects the law out there. And again, culturally, there are issues out there. LGBTQ, people are putting in here. Absolutely. Yeah, there may be issues there. But if you go to places like Dubai, do you think that there are no gay people in Dubai? Of course there are. There are gay people that live out there. I know a few that live out there. The issue is you don't make it overly offensive to people. And I know that is an issue. I know that it's an issue. And maybe in 3 to 4, 5 years' time, they will actually come round. Because if you think about where Dubai has actually come from, you couldn't be in the bikini in some places in Dubai. But they've slowly come round to the fact of what we're trying to do here is we're trying to build something where we're trying to get Western populations in here. And so they relax some of the rules. And there is nothing to say that that might not come down the track. But as it currently stands, they do have issues. They do. And I'm not going to say that they don't. And it doesn't make it perfect for everybody. It doesn't. But at the end of the day, tell me a society that is 100% tolerant. We're not. We're absolutely not 100% tolerant 100% of the time. And they do have a long way to go. But, they're on a journey of their own. And, you've got to let them take their own journey. And hopefully by more Westerners joining their communities and living in their country, they'll have a change of heart and they'll change some of these rules and some of these things that we think are archaic and inappropriate. That's the hope, right? But you can't force it on them. There is not, you can't be like, you need to stop it, you need to start doing this. Like, there are religious and cultural things behind that. And I think if you're going to try and change anyone's mind around those type of things, it has to come from a point of, okay, right, so this is your cultural values, but actually the people that are coming to your country are here and they may not necessarily see eye to eye with your cultural values. What is the middle ground for there to be some semblance of acceptance in some way, shape or form? Again, look, I don't know. I'm not there as someone who rules that country. That's not my background, but it's not perfect. But no society is perfect in my view. Anyway, let's have a look. And this, I know I'm looking at the comments right now because there are lots of conversations in here, talking about you misunderstood females born in Muslim countries is an issue. They have no say, particularly in lower classes. Yeah. And again, that's still a cultural thing though, right? There are so many issues out there, so many things that we would deem as, well, that's not fair. But they have, it's part of their culture, What do you do? What do you do? The only thing that you can hope is they catch up to what our values in the Western world are. It's hard. It's really, really hard. Anyway, I'm going to end it right there. Thank you so much, guys, for watching this. I hope you got some value from it. There are 106, 105 people at this stage. Again, these numbers are great. And, the interaction with you guys is great. And having conversations like the one we just ended on right there, I think is really, really important as well. Because I don't believe in a world where everyone can 100% see eye to eye. Like, the nuances and the difference of opinion really is what makes the world unique in its way and gives us different perspectives. And I think to a certain extent that is actually needed. It just so happens that when we talk about things on this channel, generally speaking, the conversation is focused around money, finance, economies, even maybe a little bit of politics. We've spoken a little bit about politics today, right? So, and these things are all interconnected. And my hope is that, having these conversations, not arguments, conversations, debates, exchanges, leads to, more tolerance, more better understanding fundamentally for what I'm trying to achieve with this channel. It's more education, it's more understanding, it's more knowledge, so that you can take some of this, you can implement it, grow your own knowledge base. You can then take this, go have a conversation with a friend, with a family member, your uncle, your aunts, your mums, your dads, and that has a compounding effect because you touch more people that way. And that's the whole point of me transitioning, maybe to try and do lives, because we get more interaction. And certainly instead of, you know, looking at the comment section on the videos, I can have these interactions with you in the chat. And that's the bit that I've really come to enjoy. And the fact that, you know, there's still 100 people watching after an hour and 5 minutes in is testament that hopefully you guys get some value from this as well. So thank you so much. With 100 people on, I'm going to end this here. We're at 67 likes. If we can get that up to 80, that will be absolutely amazing. I think I'll do another live maybe tomorrow. I track the news on a day-to-day basis, so if there's something interesting, we'll use that as a discussion point tomorrow evening. But thank you so much for being here. I'm going to be away next week, but we'll talk about that next week anyway. But thank you so much. Enjoy the rest of your evening. Catch you soon.
Yeah, surprise, a little different than you're used to. Dropping these bars on YouTube, knowledge I introduce you. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. We got the traders, got the picture with the Bentley in Dubai. Are you dripping in designer looking fly? On the bombardier, sipping on the wine. Broke man, we broke. Where's the fun in being broke? Stocks and bonds get you yo. That's what I'm teaching these folks. I see that smoke, see them choke. Getting coked. While I'm researching these stocks, buying coke. 20 months on the channel, million people taking note. I got a warrant for Buffet. I'm coming for his vote.